Hello viewers, welcome to my channel. I'm Hashim. In this video, I'm going to explain you about the basic concepts which are used in income tax. In examination, very frequently they will ask a theory question regarding what do you mean by assessment year? What is previous year? Then who is an assessee? What is income? Who is a person? Permanent account number, PAN. All these are the concepts which are frequently asked in examination, and every student must know the technical meaning of those terms. There are no changes in the concepts from the last assessment year to this assessment year, because already I have uploaded the videos for the last year 22-23. Now current assessment year 23-24. There are no changes. So the same video you can watch. But if on the board it is written as assessment year 22-23, just ignore it. Because our current assessment year is 23-24 and the same provisions will apply. So in this video, the first concept, assessee. Assessee means any person from whom any tax or any other sum of money like interest or penalty which is due from the person to the income tax department, or if any proceedings are started against a person. Briefly I'm explaining because the detail are contained in the further video. Now second one is person, because income tax will be collected from persons. So who are persons? Normally we see that person means a natural person, but from income tax point of view, person includes not only natural person but also Hindu undivided family, then a company, a firm, an AOP, association of persons or body of individuals, a local authority, every artificial juridical person. All these are the persons from whom income tax will collect. Income Tax Act will collect the tax, right? In detail, you can get it afterwards. Previous year. Previous year means a period of 12 months immediately preceding the assessment year. Our current assessment year is 2023-24. So immediately before this 23-24, the 12-month period is called previous year. For current assessment year 23-24, the previous year is 22-23. So the income earned during 22-23 is assessed to tax in the assessment year 23-24. Assessment year, again a year which begins from 1st April every year and ends on 31st March. Current assessment year has already started, that is 1st April 2023, and it has ended on 31st March 2024. This is the assessment year. So for the current assessment year, it started from 1st April 23 and ended on 31st March 2024. Now income. Actually income tax is a tax on income, but Income Tax Act has not specifically given a definition of income. It has given inclusive definition. That means any item may come under the income. That means the Income Tax Act has given few examples. These are the items which may be called income. But apart from that, any other item may also be income. That is inclusive definition. It has not given a specific exhaustive definition. Gross total income is the aggregate of all incomes under the 5 heads. Income from salary, income from house property, profits and gains of business and profession, capital gain, and income from other sources. If you add up the income under the 5 heads, you will get gross total income. Then total income. From gross total income, if you deduct the exemptions under section 80C to 80U, what are all these deductions? In the coming videos, you can be able to get. Taxable income means total income minus exempted income. One basic exemption is there. So that basic exemption, if you deduct from total income, you will get the taxable income. Return of income. Every person who is liable to pay tax has to submit the detail regarding the expenses, income, savings, etc. in a prescribed format. So all the details of the assessee must be submitted to the income tax department in the form of a return. Next, permanent account number. So every assessee will be allotted an identification number, so that the communication between the income tax department and the assessee will be done on the basis of that permanent account number. Last one, average rate of tax. The total tax divided by total income into 100. So this average rate of tax will be helpful in calculating the advance tax to be paid by the SSC. So these are the basic concepts which I have explained in detail in this video. Remember, the provisions are same for 22-23 and 23-24. No change. So you can rely on this on the concept explained in this video. Hello viewers, welcome to my channel. I'm Hashim. So far 3 videos I have completed on income tax introduction. In the previous videos, I have explained you about the meaning of the term tax, objectives of tax, then characteristic features of tax, types of taxes, direct and indirect taxes, canon of taxation, GST, tax structure, etc. So the problems are based on the theory. Remember, many students will find the income tax subject as a tough subject. The reason is they will directly go to the problems without understanding the provisions of the act. So these videos which I am making on introduction are the important basic videos. That means on the basis of this only we can be able to do the problem. So if you cannot be able to understand, then every problem will be difficult for you. So in examination, even the theory question will be asked, whatever I am explaining right now. So don't underestimate these videos. Watch the videos till the end. Now, if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 2022-23. Watch the earlier videos and come to this video. So before proceeding, take the screenshot of the points given on the board, then I'll explain every point in detail. Now, basic concepts. So in this video, I'm going to explain you some concepts which are used in Income Tax Act 1961. These concepts has a technical meaning. So you must know. In examination, they will ask you, what do you mean by SSC? What do you mean by assessment year, previous year, income, persons? These are the different terms, concepts which are used and have a technical meaning. So you cannot write in your own words. The law has given. In the law, all the provisions are given for the concept. So you have to understand what is given in law. Now, the levy of income tax in India is regulated by Income Tax Act 1961. In India, throughout India, the income tax is levied by an act which is passed in the parliament. That act is called Income Tax Act 1961. This act is effective from 1st April 1962. From this date onwards, it is applicable throughout India. The Income Tax Act is amended every year through Finance Act. See here, the law Income Tax Act is not same as in the earlier years. Every year, lot of amendments will be made, changes will be made, because the income tax depend on the income of the people. So do you think that the income of the people will remain constant every year? No, the income will change, the conditions will change, the situation will change. So accordingly, Income Tax Act has to be amended every year. So this amendment will be done in the Finance Act, which is passed every year in the parliament. Now the administration of direct taxes, that means the administration of direct taxes is regulated by a body called CBDT, Central Board of Direct Taxes. This is the body which regulates, which administers the direct taxes in India. For proper administration of Income Tax Act, CBDT makes rules from time to time, because there will be some confusion, ambiguity regarding different cases. For that purpose, the CBDT has made the rules from time to time called income tax rules. Now, some important terms which are used in Income Tax Act 1961 are as follows. So these concepts are very important from examination point of view. They will ask in theory question. The first concept is SSC. Every student must know what is the meaning of the term SSC. SSC means any person from whom any tax or any other sum of money is due to the income tax department. That means any individual, any person who has to pay income tax or who has to pay any other sum of money like interest, penalty, etc. due to the government, due to the income tax department, that person is called SSC. Example, myself, I'm an individual. I have to pay, suppose, 50,000 rupees as income tax. So I will be an SSC because I have to pay tax. Similarly, a person is there who is not due any tax, but interest is due from him to the department. The person will be called SSC. Similarly, a person who has to pay penalty for not paying the tax, the person will be called SSC. Or in respect of whom any proceedings under the Act has been taken for the assessment of his income or the income of any other person for which he is assessable. First, we have seen an individual from whom any sum of money, any tax or any sum of money is due to the department. Secondly, Income Tax Act says SSC means a person against whom income tax proceedings has been started, either on assessment of his own income or the income of any other person for which he is liable. Example, for the current assessment year 22-23, the basic exemption limit for non-senior citizen is 2,50,000. For senior citizen 3 lakh, for super senior citizen 5 lakh. These are the basic exemption limit. Suppose a person's income exceeds basic exemption limit, but he has not paid the tax. Mr. X, he has earned an income of 10 lakh rupees during the current previous year, but he has not paid the tax. Then what will happen? Income Tax Act will start legal case against him. Proceedings will be started by Income Tax Act against that person because he has not filed the income. He has not filed the return. The person is called SSC. Either on his own income or on the income of any other person. Example, a minor. A minor cannot file the return because he is incapable of entering into a contract, but minor has income, taxable income. Then the parent is liable. Similarly, a lunatic person is there. Some representative will be there. So this representative or parent, they are liable to pay tax not on their income, but the income of the children, but the income of the lunatic. They are assessable. They are called SSC, right? Next one is, or any refund is due to him or such other person. Sometimes more tax has been paid to the department, then Income Tax Act will refund. Example, according to calculations, my tax liability is 50,000. But during the current previous year itself, I have paid advance tax of 60,000. TDS and advance tax is more than the actual tax liability. In that case, Income Tax Department will refund the money. The person to whom refund is due is also called SSC. So 3 terms have been defined. First, a person who has to pay income tax or any other sum of money to the department, the person is called SSC. Secondly, a person against whom the income tax proceedings has been started either on his own income or on the income of any other person. Thirdly, any refund is due by the income tax department to a person. The person will be called an SSC. That's it. These are the points you have to remember if a theory question is asked, who is an SSC? Next comes person. Normally we think that person means a natural person just like us. We are all natural persons. But from income tax point of view, person does not mean only natural person. Apart from natural person, some artificial persons are also persons from the income tax point of view. So who is a person? According to Income Tax Act 1961, the term person includes the following types of SSCs. Many a time, Income Tax Act has not given specific exclusive definition. Most of the times, it will give inclusive definition. Why inclusive? Because apart from these persons, any other, person will also be treated as a person under Income Tax Act. That's why it is inclusive definition. So Income Tax Act says person includes the following. Who are the person? First, a natural person, he or she is liable to pay tax on his personal income, is designated as an individual. A natural person just like us. So a natural person, he or she who is liable to pay tax will be treated as an individual. So I am an individual. I am a natural person. First person. Second person is Hindu undivided family. A Hindu undivided family is a group of persons lineally descendant from a common ancestor. So in Hindu community, a group of persons are lineally descendant from a common ancestor. That group of persons is called Hindu undivided family. They are running a business. The head of the family is called the Karta. The Karta is responsible for managing, controlling the whole HUF business, and Karta is liable to pay tax on behalf of HUF. The HUF is also a person according to Income Tax Act. The other persons of Hindu undivided family are called co-partners. Next comes company. Any company which is registered under the Companies Act 2013. In India, the Companies Act 2013 is there. In that, all the companies registered will be known as company. Firm. Firm means a partnership firm which is governed by Indian Partnership Act 1932. So a partnership firm is a person, a company is a person, Hindu undivided family is a person, natural person is a person. Next comes an association of persons or a body of individuals. A group of persons formed for performing a specific purpose. Example, joint venture. Some two or more than two persons join together to construct a building. Once the building is constructed, the relationship will be over, the contract will be over. So temporary partnership is made to complete the joint venture. So that joint venture is called body of individual or association of persons. That is also a person. Next one is a local authority like municipalities, local bodies. These are also person. Lastly, every artificial juridical person. This every artificial juridical person means any person which does not fall in the first A, B, C, D, E, F. First 6 categories, if the person is not fitting, then Income Tax Department says it is an artificial juridical person. Example, a statutory corporation or a Hindu deity. Statutory corporation is a corporation which is specifically made by passing an act in the parliament. It is just like company, but it is not registered under Companies Act. It is formed by passing a special act in the parliament, that is called statutory corporation. That will come under every artificial juridical person. Similarly, Hindu deity. In India, in Hindu community, deities are there. So, deity will also be treated as artificial juridical person. So, these are the persons. Next comes previous year. Very important. Every student must know this previous year, because in the coming problems, every problem you will come across the word previous year. You must know what is the meaning. Previous year is the preceding 12 months period to the relevant assessment year. The current assessment year is 22-23. Here I have written assessment year 22-23. For this assessment year, the previous year means 12 months period immediately preceding the assessment year. The assessment year 22-23. So immediately before 22-23, it is 21-22. So 21-22 is the previous year, 22-23 is the assessment year. So it starts from 1st April and ends on 31st March. Financial year will begin from 1st April and ends on 31st March. And total income earned during the previous year is considered for purpose. See here. For income tax purpose, the income earned during the previous year is assessed to tax in the assessment year. That means whatever income earned during the previous year is taxable in the assessment year. Remember this point. All these things you have to write in examination. If a theory question is asked, what do you mean by previous year? So income earned in 21-22 previous year will be taxed in the year 22-23 assessment year. Then previous year is the financial year immediately preceding the assessment year. Simple rule you have to remember. Previous year means the year which is immediately preceding the assessment year. For the assessment year 22-23, our current assessment year 22-23, the previous year is 21-22. It started on 1st April 2021 and ended on 31st March 2022. That's all. This is the previous year. Now next concept is assessment year. Again, assessment year is a period of 12 months beginning from 1st April and ends on 31st March. Example, our current assessment year is 2022-23. That means it started from 1st April 2022 and going to end on 31st March 2023. This period is called assessment year. The income earned by the assessee during the previous year will be assessed to tax during the assessment year. During this period, the total income of an assessee earned during the previous year is taxed. That's why we call the assessment year is a tax year and previous year is the income year. Previous year, income year, and assessment year is the tax year because we implement the tax in the assessment year. That's it. Next comes income. Very important concept. Income. As the income of a person is taxable, it is necessary to know the meaning of the term income. Without understanding the meaning of the term income, how we can be able to calculate the income tax? Income tax is a tax on income. So there should be some clarity regarding what is the meaning of the term income. But unfortunately, Income Tax Act has not given a specific definition that this is income. It has given only an inclusive definition. It says income includes the following. That means any other item may become income. Any other item may also become income because it has given only inclusive definition. It includes the following, right? Now, how we can be able to know whether it is an income? First, we study what are the items. And remember one point. Every receipt is not an income. There are many receipts which are received by an assessee, but it will not be treated as an income. Example, suppose I have taken a loan from bank of 5 lakh rupees. So I have taken a loan, it's my receipt. But Income Tax Act says it is not an income. It's a loan amount. So every receipt is not an income, but every income is a receipt. That conclusion you have to make. Then it can be concluded that every income is a receipt, but all receipts are not income. Section 2, subsection 24 of the Income Tax Act 1961 says income includes the following. What the income includes? Profits and gains. Profits and gains of any business is an income. Secondly, dividend. Dividend is the share of profit received by a shareholder from the company. That is also an income. Thirdly, voluntary contribution received by charitable institution or religious trust or other institutions. Any voluntary contribution received by any trust, charitable trust or religious trust, that will also be treated as an income. The value of any perquisite or profit in lieu of salary, under that income from salary. In the coming videos, we will take up the head income from salary. In that income from salary, we come across the concept of perquisite, non-cash benefit to the employees, and profit in lieu of salary. I will explain you in detail later, but right now you remember perquisite and profit in lieu of salary, under that salary is also an income. Next one, any capital gain on the sale of capital asset. If an assessee sold the capital asset like house property, gold, shares, etc. These are called capital asset. If there is any gain arising on sale of capital asset is called capital gain. It's an income. Next, profits and gains of business of insurance. If the business is insurance business, there are many insurance companies, mutual insurance companies. So any gain arising, any profit arising from insurance company, that is also income. Any winning from lotteries, these are called casual incomes. Unexpected incomes, non-recurring incomes. Casual incomes are winning from lottery, crossword puzzles, races, card games, gambling, betting, etc. These are the examples of casual income. Winning from lottery, crossword puzzles, horse races, gambling, betting. The income from all these are, non-recurring, unexpected. But Income Tax Act says this casual income is also an income on which tax will be applied. For example, a person won a lottery. A person has won some winning from horse races or gambling, betting. They are liable to pay tax. Next, any sum received by the employer as contribution from employees towards only to any PF, Provident Fund, for the welfare of such schemes. So any income received, any contribution received by the employer from the employees for the welfare, that will be treated as income. Gift received in cash from any person in excess of 50,000. In the coming videos, we'll discuss more. Right now, you remember, gift received from any person in excess of 50,000 rupees will also be treated as an income. Next, forfeited advance amount on capital asset sale transaction is treated as income and taxable under income from other sources. Amount forfeited on the sale transaction of a capital asset, that forfeited amount is also an income. Example, I entered into an agreement to sell my house to Mr. X for rupees 50 lakh. For 50 lakh sale price, I agreed to sell the house after 2 months. Right now, some advance money is received from Mr. X. I received 5 lakh rupees. 5 lakh rupees advance money. I told him that you have to pay the remaining amount in 2 months period. If 2 months expire, then I will not return you back 5 lakh rupees. That amount is forfeited. I will not return it to you. According to the agreement, Mr. X has paid 5 lakh rupees. And in 2 months, he has not purchased. And after 2 months, he said he is not in a position to purchase the house. I will not refund the amount of 5 lakh rupees. According to the agreement, it should be forfeited. That's an income to me. The Income Tax Act says amount forfeited on sale transaction of capital asset will be treated as income, and it is taxable under income from other sources. That's all. So in this video, I have explained you about the basic concepts, SSC. Then I have explained you person, then previous year, assessment year, and income. But income, still some more explanation is required. By analyzing this definition, we cannot say that anything earned is income. We have to go by the judgments given by High Court and Supreme Court in India, where in a number of cases the court have decided whether these are incomes or not incomes. So if any case arises regarding the problem of income, then we have to refer the guidelines given by the High Court and Supreme Court, which shows the characteristics of income. So in the next video, I'll continue the basic concepts. Basic concepts will be continued in the next video, where I explain you what are the characteristics, features of incomes given according to the judgments of High Court and Supreme Court. Inshallah, we'll continue our discussion in the next video. If you are satisfied, give a like to the video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. Subscribe if you have not yet subscribed my channel. What I have seen, the subscribers are very less compared to the viewers. Viewers are more, but subscribers are very less. Come forward, subscribe my channel. It will motivate me. And lastly, by the super thanks which is given below my video, inshallah, we will continue in the next.